Using equity in your current home to buy another house is possible, but it will depend on your financial situation. Like with any loans or credit, the lender will need to know that you're good for the money. Because an equity loan is secured against your home, you can get competitive rates. But that also means there's a bigger risk for you if you can't make your repayments. Basically, your house is on the line. When you're considering taking out a loan like this, look out for the closing costs. It's usually a percentage of the total cost of the loan. So for example, if you took out an equity loan for 50 grand and the closing fee is 5%, then you'd pay 2.5 grand when the loan was over. Something else you should think about is having an extra mortgage. You'll have to remortgage your current property and then take out a second mortgage for the next one. Lenders will need to make sure that you're good for this, especially with the current inflation of mortgage rates. Your credit rating, employment situation, and whether it's going to be affordable will all be taken into consideration. If you're paying for your second home outright, that obviously will mean that you've only got one mortgage payment. This is how it would work. Equity loans normally let you borrow between 80 and 85% of your equity. So let's say your house is worth 200 grand, you've paid 100 grand off, then you'd be able to borrow between 80 and 85 grand. If you buy a second home using equity release, you'll still need to live in your main home for at least 6 months of the year. There's also the issue of stamp duty depending on the value of your second home. Evaluate your finances, then compare different lenders to see which rates are lowest. Read through all the finer details, have plenty of conversations, and get the best deal you possibly can.